Welcome to Stock Markets with KR. Stock Markets with KR में आपका स्वागत है. Today here back with Anosh, back for the weekly wrap up. I hope everyone's doing good. Anosh, how's it going?
It's going great. It's going great, KR. Lovely to be back. Always love to be on your YouTube channel.
Yes. Love to have you here. So everyone was talking about how this has to be a recurring weekly series. So here we are. Great.
There to bore everyone with 15-minute videos every week.
Hopefully just 15, not longer, because everyone will be like, oh no, unsubscribe. Cool. Anyway, let's jump into the markets, shall we?
Perfect. Okay, guys. So here we have the Nifty weekly chart. As we can see, it's a comfortable close above that 1.618 fib extension. Nice base was formed, which we covered last week. We said we're pretty bullish. For the last 3 weeks, we've been bullish. And yeah, this is a great all-time high close for the Nifty. Looking at the daily chart, we see that this two standard deviation regression channel has been respected mostly to the upside and to the downside both. It serves as a good support and resistance level. It works much better for us than trend lines do, in fact, or moving averages for that matter. We use this pretty extensively and we've found good success with it. It's a pretty underrated tool you might want to explore. It's the regression channel with the two standard deviation setting on TradingView. Moving on to Bank Nifty very quickly, we see that it's sustained above our level of 34,000. But from the looks of it, we cannot rule out a retest of that level. This breakout might get retested. Some downside we can expect. And aggressive longs at this level on Bank Nifty would not be very advisable from a charts perspective at least. Now we have the broad market indices. That's the Nifty mid cap, Nifty small cap, and the Nifty 500. As we can see, very strong closes on all of them. The Nifty small cap index is at its previous all-time high, whereas the mid cap and 500 are way above those levels. So this means there can be some trouble for small cap stocks, seeing how the index is kissing its old all-time high of 2018. That being said, the uptrend is very strong. This minor sideways correction was also like most selling pressure was absorbed, and more than a price correction, it was a time correction. We've been saying that pretty much all through of that time correction. This is one of my favorite charts. It is the broad market relative strength to the Nifty. This is typical bull market behavior that we're seeing, where the broad market is outperforming the Nifty massively. I mean, if we look at these up moves after the breakout, they're insanely strong. This is also something we've been covering pretty much ever since late 2020. We've been talking about these charts and how it means that this bull run is pretty secular and not just concentrated to the top 50 or top 100 stocks of the country. We come now to the India VIX, which is our volatility index. It tells us that it's how we use it is a measure of uncertainty and unease in the markets. We can see it's closed below the long-term mean, which is at around 17, and it closed at 15.94. So that tells us that volatility is pretty low at these levels and uncertainty has pretty much eased out. This is contrary to the move in April when it rose sharply to almost kiss the one standard deviation level, post which it's just been cracking downwards. KR will now talk about some Nifty heavyweights, and we'll start with Reliance.
Right. Starting with the big daddy once again, we've got Reliance, and we can see the past week has been pretty good for Reliance for the most part, except for around 3 days. And last week we were discussing about how it's a real question whether the momentum will be, sustained or not. So for the most part, at least initially, we could see the momentum being sustained. So the first day of the week was actually the candle after the second big candle, basically. So that was Monday. So after that, it hasn't been able to move that much. But then the broad market has been in a bit of a fix this past week. So I think that goes sort of hand in hand. Plus, we've got that 2200 massive level there. We can see there's almost a double top that's being formed at this point. So Reliance, again, similar to what Anosh said with Bank Nifty, I'd say that if you're, if someone's going long on Reliance or something at this level, not really that sensible. We can see that fib extension has already, hit those two hit those two targets as well. So I think at this point, Reliance might just move sideways unless there's some real good news trigger or something which can really push the stock ahead. So below 2200, not that good in my view. Moving to HDFC Bank, Anush. Yeah, we've got HDFC Bank, and we can see 1500 levels were sustained, which is a good sign. But that resistance line that you can see, it's at 1529. So in general, this has been an important level up until now, and I think it is only above that that we might see some strength, or else we might see it being sideways between around 1480 or so to 1420 to 1529, which is that line. So RSI has also been rejected. RSI 60 has also been rejected so far. So we can see it's consolidated around RSI 60, and then it has sort of come down a little. So maybe once RSI 60 is also crossed, that is when 1529 will be breached, and that is when we might see some good things happening with HDFC Bank. Moving on, we've got Infosys. And Infosys, so last week, we spoke about how Infosys has that spinning top of sorts. And generally, when we see a spinning top on Infosys, in the past, I have observed that either a downside break or an upside break has, shown a good, directional move. As of now, that move was downside, but it was held together by the 50 MA support, as we can see, which is the black line over there, and the 1370 level, which was also discussed earlier. So as of now, we can see it's trying to get back to those levels. I think unless that higher upper side of the spinning top is really maintained, I can't really see Infosys doing that well also, because again, it's just that kind of a stock. RSI 60 once again, rejected. So that's what Infosys is showing us. And then moving to HDFC, we've got HDFC at the very important resistance zone. So between 2580 to 2620 is the line that I typically have for my personal trades in HDFC, because that is when HDFC typically has started to show its weakness. We can see in the past, since around March, it really hasn't been able to close above that area. But this is, I think, the highest close that we've seen since April or mid-March, which is a great sign. I think this might just be HDFC doing something good. RSI is just at 60, which is great, but it's HDFC. We know how volatile it is. We can see the chart. We can see that a couple of great candles and one massive red candles, all it'll take to come back down to the 50 MA line, which is at 2500. So next, moving to ICICI Bank. Not much going on here, if I'm being honest. We can see 633 levels are there for support. Resistance at 665. We're approaching the high very, very, very soon. So I think if 630 or so is maintained, we might see the high being retested. RSI has dipped below 60. I think that's a very important trend. We can see RSI in general has dipped below 60 for many stocks, not just ICICI, not just for HDFC Bank and such. So it's going pretty weird for now. Maybe it'll pick some direction. Anosh, like you said, Banknifty as of now, the Banknifty as an index is not really looking as good of a long as it was last week. So that's
No, sorry if I can interrupt you here. While you say yes, a lot of stocks dipping below that 60 RSI line. I read a very interesting statistic by someone I follow very closely on Twitter. Very good guy. Has always been posting great content. The statistic read that of all the major listed stocks, not a single one was below the 30 RSI level. So I think that's also a very important trend that we should talk
Definitely.
about. There's mad bullish sentiment in the market right now. So almost everything is above that 30 RSI level, except maybe Vakrangi, if I'm not mistaken. That was the only one which traded the RSI, and that was also shortly resolved and it moved higher. So as of that day, there was not a single stock below 30 RSI. That is really
That's
something to say.
pretty
Not a
crazy.
single oversold stock in the entire market. Yeah, pretty much
That's
something.
insane.
Sorry, back to
Because
you.
of course, that's insane. That includes like 5,500 some stocks, right?
No, no, no. I think it was. I don't recollect the statistic
Okay.
exactly, but it was stocks above a certain market cap.
Okay.
So
That's
yeah,
still
that
pretty insane.
it would
That's
be
crazy. Yeah. And
pretty
so
insane.
in
Yep.
general, since we're on the topic, RSI 50 has typically been the line. So even if you guys watch my 5-minute analysis videos that I post almost every day, you will have noticed that I always say that RSI 50 and above is bullish bias. What it means is that, anything which is above RSI 50, typically it is not yet in that shorter term bearish mode, or the sellers have not completely taken over control. So yes, as you said, RSI 60 below is not the only factor. RSI 50 above is still bullish bias, but then it's still an important sort of thing to realize. And we can see in the past, ICICI Bank itself, we can see there have been several RSI 60 rejections. So maybe it's a stock specific thing as well. So yeah, we'll move to Kotak Bank now. And Kotak Bank is actually a trade that we had spoken about last weekend, and Anosh will brief us more on that in some time. Talking about the stock here, I think that cluster, you can see there's a cluster of lines over there, which basically means that it's an important zone in my language, and it has managed to clear above that zone, which is a great sign. Uh, as of now, that 1814 line, which is that retracement level of 38.2, that has acted as a resistance. So not really sure how much strength Kotak Bank will have unless it's able to really clear above those levels with strength. Um, and that's what we're seeing. Has moved above the 50 DMA though. Yes, we'll move to SBI now. And SBI, we can see there's again not much happening. As you said, Bank Nifty as a sector, as an index, is kind of going slow. So we can see something similar to that happening here. Highs were rejected, which is not a very good sign. Thursday, we saw good buying happening at lower levels. Friday, we saw just crazy amounts of selling happening. Looks like PSU banks in general might have been a little iffy on that day. But clearly, I mean, SBI has gone up a lot. So saying that, oh my God, it's not looking bullish is like, come on, it's bound to happen. So I think not much to worry here, but at this level, possibly not the best long.
Sorry, flip too soon. But since you guys have seen it now, yeah. KR, would you like to talk about Thomas Cook?
Thomas Cook. So Anosh and I were discussing this talk. In fact, he had also mentioned this last week that check out Thomas Cook, dude. It's about to do some very interesting things. So we had been talking about it, but since it is a stock which is extremely volatile, typically we don't share those things because again it's very volatile. Not exactly the greatest stock, but it does appear to be very interesting. So if you see, as long as it's able to hold that 60 or so level, it can be a very interesting stock to just observe, if not actually get. And the entire Thomas Cook fiasco, what happened was very interesting because the company which is listed here, the company which we're seeing here, and the company which was actually in a kind of a crappy show, poop show, if we can call it that, is like completely different. So this company, I believe, has good financials, and it's all not that bad at all. So it's very interesting to see such a beaten down company climbing up. Anosh, any comments on Thomas Cook?
Absolutely. No, I'm with you on the 60 level. If we're above 60, 80, me personally, I'll be buying this one on dips. Of course, we do not advise any viewers to do that. None of this is advice at all. This is all educational content. But yeah, Thomas Cook is one of my most favorite setups at this point because you don't always get to see a laggard, or I'd like to call it a dark horse like this moving higher this way. So that's for sure. And we'll move on to our next trade setup. We're looking at Hero MotoCorp. What we're seeing here is the bottom red line is the AV WAP from the March 20 lows, and this is an AV WAP from the recent 2021 highs. Like we're seeing, this has faced some resistance at this AV WAP level. AV WAP is basically anchored VWAP. If we were to put it in simple words, it would represent the average price at which buyers have managed to buy this stock in this fall. Uh, this above 3055 definitely looks like a good long candidate to us. We'd place our stops below 2930, which is this tiny little congestion low over here. That's a small, about 4.5, 5% stop loss, bearable. And the upside is quite exciting. We can easily see it going till 3400. Again, this is not advice. This is just educational content on how we analyze stocks and how we place our trades. So please do not consider this as any advice.
Yeah.
Lastly, I'd like to give everyone a quick update on the stocks we had covered last week in a similar fashion. Our Grasim long trade activated, and it's currently a hold for us. Kotak, same thing. Kotak came dangerously close to our stop loss, but luckily managed to close higher, and we're still holding. ICICI Prudential, good mover, about 5% in the money and holding. The bail trade has not yet activated as it did not close above our strength level. So we're waiting on that one. And I think that's it for today. Thank you, Kronal.
Yeah, we are still yet to do a Q&A though, so which is a new inclusion. So we'll talk about
Perfect.
the questions first. So we got a couple of questions, and one of the stocks that was asked was JK Tire. So we took a look, and Anosh, what do you feel about JK Tire?
I think I should just pull up the screen on that one.
Yes.
Right. JK Tire, what I was looking at was the fib extension of the March 2020 crash. 1.618 was here at around 123. It's oscillated, kind of gravitated around that for a while.
Right.
It made a blasting move in around January. That was great. That was awesome. But post that, it really never managed to even close above. Forget closing above. It was just drifting since then. Gave quite a scare over here. I'm sure anyone who was long on this breakout must have got stopped out over here at least, or should have at least got stopped out over here, because this was pretty disappointing a move. It was a very promising and strong breakout. Other than that, I think till we don't close above this 145 level, I pretty much want to stay away from this one. It's too sideways, too congested for me to like take a directional call on. So yeah, I don't really want to go long on this one unless we're closing above this 140, 145 level. What do you think,
Right.
Ronald?
I feel something similar because here we're seeing very small candles happening in the past few days. Like it does not show promise to me personally, but it does not show promise to me personally yet, which means that there's a good chance that something can happen. So it's definitely a stock that you could add in your radar or something. But as far as getting into a position right now or something, I might not. I mean, it's not
Fair
not
enough.
not the ideal setup for me.
I'd agree.
Yeah. So
Perfect.
we've got moving on. We've got another question, and that is about the stock TBZ, Tribhuvan Das. So let's pull that chart up as well.
Sure. Ooh, I think we need to look at a longer time frame
Yeah,
for this one.
monthly is great, I think.
Yes,
Great.
there you go. Yep.
Yes. So here what we are seeing, like this is the log chart. If we remove the log chart, we can see a very linear trend line happening with TBZ, which is not really a good sign if I'm being honest, because we can see the resistance in the past has been right from that line. So I think unless that line can really be breached, unless we see good close, a good sustained trade above that line, I'm not really sure if this stock will have a lot of momentum. Plus, if we actually retrace the stock, so if we go to the monthly chart again and we do a retracement, we do a quick retracement of the high and the low, we will find that it is right at the 23.6% mark. So which is again not a very pleasant sign if you ask me, because that resistance is there. So unless it's able to hold above these levels, I'm personally not convinced for a long trade. What do you feel, Anosh?
Yeah, Krunal, I think you're right. Volumes also, even in the short term, I mean, they are rising here, so it's a little confusing. There's definitely something cooking here,
Yeah.
but I'm not too sure because I'd also like to see a sustained close above these levels. It's managed to do that this week, but barely. So
Right.
I'd like to see it show some more strength or a significant pullback to a lower level to find a better risk reward opportunity at least. I mean, here I just don't see that kind of favorable risk to reward ratio, which is why I'd stay away from this one.
Right. That's fair. And there were a couple of other stocks also that were there in the questions. In fact, there were more than a couple. There were quite a few other stocks, but many of them are really volatile. Like their charts are really very nasty looking, very all over the place. And Anosh, you and me, we both looked at the chart, so it's not like we did not look at it, but we just decided that it's just the chart is just too choppy to share it in the video. So because
They,
yeah,
to put
please
it
go ahead.
in a politically correct manner, I'd say they are the kind of stocks in which you'd make money only if you knew what was up in those stocks and not by looking at the charts. I mean, probably any chartist would get just whipped around in those stocks, and technical analysis might not really work. So, anyone having any information might do well, but
Yeah.
other than that, I mean, I think I'd get whipped around in that stock like anything. So I'd stay away.
Yeah. By the way, for all our viewers, information, trading on information is not good. Just don't do it, or SEBI will come after you. But anyway, anything else that we have? Anosh, anything else you'd like to add?
Yeah, as like every week, like that same trumpet, I would like to talk about BFP, which is a social initiative that Krunal and I are closely associated with. Bombay Feeding Project is the name, and it involves feeding about 100 full meals to people who reside on the streets, who are in a very difficult financial situation currently, pavement dwellers, and those sorts. I'm proud to say that this week we managed to distribute around 5,000 kilos of watermelon to these people. And the watermelons were cut into small pieces and placed in boxes and handed out to a lot of children. There's a very cute reel on our Instagram channel. So, anyone wishing to check it out, please go hit up Bombay Feeding Project on Instagram and do check out that reel. I'm sure you love it. It's very wholesome, and please do contribute wholeheartedly to the cause. There's a payment link in case you like to donate for this lovely thing. So yeah, that's about it from my side.
Great. So all, by the way, all the relevant links, including links to my social media, Anosh's social media, the Financial Pandora's social media. By the way, they are the ones for whom we make the Market Chronicles series, which is what is related to what we're talking about today. All of those links, including Bombay
Feeding
Feeding
project.
Projects link, is there in the description with all the nice resources. So make sure that you check the description out as well. And yeah, that's it. That's about it for this one. Anosh, any closing remarks?
Yeah, that's awesome, Krunal. Thank you so much for having me, and look forward to doing this next week too.
Great, you got it, man. Chalo. Bye, everyone.
Okay,
Take care. Happy trading and have a nice Sunday ahead.
perfect.